Good morning, trading world. It is January 13th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook, basically, flat CPI postpones volatility for today. I was expecting some fireworks upon the CPI numbers yesterday. Instead, I got a few sparks and then a dud the rest of the day. Yesterday, I did say that Friday would be a close second as far as volatility. Expect a decent sized drop pre-market and early in the trading session, but once order flow catches up, look for a reversal to power us up. Excuse me. Look for a reversal to power us up to and maybe through the highs of yesterday. I did manage to break the legs on some bull put spreads, meaning buy back the short puts yesterday and put on some long puts around the edge 397. Like I've been saying, I don't see price persisting for long periods above the major channel, which is 397. And I don't think market makers are ready to let it break below the current lower channel edge, which is 379. This brings us to the key levels of the day. Let me bring those up. Alright, here we are back with the key levels of the day, starting on the support side. We have our Jack support at 395 to the 394 area, Queen support 393 to the 391 area, and then King support 390 to the 385 area. We should find that major support somewhere around here between the Queen and King before reversing on the day. On the resistance side, we have our Jack resistance at 397 to the 398 area, Queen resistance 399 to the 400 area, then King resistance 401 to the 403 area. The main thesis for today is a small bullish bias closing above the 396.96 with a projected target high of between 396 and 403. The alternate thesis is bearish, closing below the 396.96 with a projected target low of between 395 and 385. The main channel we are in is from 379 all the way up to 397. The major channel above is 397 to 416. Market strength and breadth fell abruptly at the open and grinded up from there. I see a similar path today, only to gap down on price and strength deeper than we have all week, then consolidate at support, then grind back up the last half of the day. We have somewhat of a dissonance between the technical side, which is bearish, and the quant side, which is slightly bullish. That brings us to the scenarios of the day. Alright, our first and most probable scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the Queen or King support, find midday chop around either the Queen or King support area. Give me a moment to correct that. Alright, find our midday chop. Actually, it'll probably hit a little bit before midday today, but either way, the midday chop around that Queen or King support before going back up with the same energy or force we went down with the first part of the day. So that is our rounded reversal day type structure. All right, our second scenario is going to be our expanded range day structure. We could have an initial push down, then find major support somewhere between the queen and king to consolidate at for a while before powering back up the second half of the day. That is our expanded range day structure. And what makes it the range day is we get prominent closes below the previous close and then also above the previous close. So that is our expanded range day structure. Alright, and our last scenario is going to be our trend day down day type structure, meaning we open gap down away from the previous close represented by the blue line, and we start with a push back toward that previous close. We find resistance on or before that previous close, then begin with the downtrend for the day, otherwise known as our golden window, the best time of day to trade. We find our midday chop around either the possible queen or king support area. Maybe come out the second half of the day looking to continue the primary trend of the day, which would be down, but only to find out or wind up being a head fake and reversing it and then getting a rally into the close. So that is the scenarios for today that I will be preparing for. Again, I don't see trade persisting for long periods above this channel, and I don't think that we're quite ready to break below this channel with persistence as well. So I've been saying that we're going to be this sideways range bound until sometime in February. So I think this is pretty much what we're seeing playing out right now. As always, your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.